Here is self-test number 4. I really hope that you are learning here, and I hope you're getting a lot out of this. I actually am just now coming back, if you've noticed, after a few months and creating these self-tests because someone contacted me and made that suggestion, and I think it's a great idea, and I really hope it's helping you. Please don't hesitate to leave me comments or send me an email if you prefer. My contact information is on the website, gailmarie.org. Comments and suggestions are greatly appreciated to help me do a better job for you. And something that you could do to please help me is to share my playlist, the Bookkeeper training playlist, on your social media pages and help me get my information out there. I'm trying to build my own bookkeeping service. So maybe a business owner will see my information and contact me so we can help each other that way, okay? All right, let's get on with self-test number 4. I have recorded some transactions here that I would like you to create a general journal entry for. The very first step is to look at each one of these transactions and create a chart of accounts. All right, and then next to each account that you know you need, record whether it's a current asset, a fixed asset, current liability, long-term liability, or an expense, just like we did in the chart of accounts in the videos, okay? Then once you get that created, make a sheet for each one of those accounts. And you'll see here on the Excel spreadsheet, I have done that already. So that'll kind of give you a little hint of what you need. And then once you get that created, then go ahead and create a general journal entry for each one of these transactions. And these can be in any order. And the date can be any date. It can be today's date, whatever date that you're working on. Now, each one of these could possibly, in reality, have occurred on different dates. So just note in your general journal entry, since this is just practice, come up with a random date for each one of these purchases, okay? Then once you get that completed, come back here and we'll go over the answers. So stop now and I'll see you back here in a minute. Now let's go over the answers. So the first thing was the chart of accounts, and hopefully your chart of accounts looks something like this. The building, equipment, and vehicles all belong in the fixed assets section of your balance sheet. Due to local hardware belongs in the current liability section, the note payable building is a long-term liability because it's going to take more than a year. Same with the note payable car and the note payable dump truck. The owner's contribution belongs in the equity section of your balance sheet, and supplies belong in the expense section of your income statement. So if you had any trouble here, or if you have any questions, please leave me a comment. Now let's go on to the general journal entries. I know in the video I showed you to put a general journal entry on one sheet, but if they only have a couple of transactions for each journal entry, it's okay to do it this way, numbered 1, 2, 3, 4, as you see here. Either way, if you did one sheet for each entry, that's absolutely fine. So let's take a look at our number 1 entry is a car purchased and financed 100% for 5 years. So our first general journal entry should be vehicles. That receives a debit amount because vehicles are in the asset section of our balance sheet. And then notes payable car should receive a credit of $24,000 because that is in the liability section of our balance sheet. And then your description. Oh, and let me point out here, if you notice on the credit line, we always indent a few spaces for the credit transaction. Now, of course, you're going to be doing everything on the computer, so this isn't really that important, but it's good for you to know. The description here would be to record the year, make, and model purchased from the local dealer on whatever date that you selected. All right, great. Let's take a look at number 2. Screwdriver and hammer were purchased by the owner with his own personal money, $50. So let's take a look at that general journal entry. The debit would be supplies, $50, because that's an expense, and expenses are debit balances. And the other side of the entry would be a credit to owner's contribution because that is in the equity section. All right, great. Then our description is screwdriver and hammer purchased with owner's personal money on whatever date there you decided. All right, great. Let's take a look at number 3. That is the dump truck purchased and financed 100% for 7 years. So that's long-term, definitely over a year. Our general journal entry would be equipment, $60,000 in the debit column because that's in the asset section. And then note payable dump truck, credit $60,000 because that's in the liability section of our balance sheet. There's the description, dump truck purchased and financed 100% for 7 years on whatever date you picked. All right, then let's go to number 4. Building purchase financed 100% for 20 years. It's going to be the same as the others. We have our building account, receives a debit of $180,000 because it's in the assets section. Notes payable building is $180,000 credit because it's in the liability section of the balance sheet. There's the description. Perfect. So now let's move on to number 5. And that is a computer purchased with the owner's personal money. So we come back over here. Our debit is to equipment, $1,200. The credit goes to owner's contribution because that's in the equity section and that receives a credit. And our description is computer purchased with owner's personal money on whatever date you chose. Then number 6, let's take a look at number 6. Toolbox purchased from local hardware store on credit to repay in 12 months. All right, so let's go to our general journal entry. We're going to post that to the equipment account, $800. The credit will go to due to local hardware store. That's in the liability section of our balance sheet, $800 credit. And our description is toolbox purchased from local hardware store and credit to repay in 12 months on whatever date you picked. So hopefully your journal entries look like this. If not, please reach out and I'll help you as much as I can. Now let's take a look at our general ledger. And remember, the general ledger can be here on an Excel spreadsheet. Each one of these sheets makes up the general ledger. Each one of these account sheets that I have here named as accounts makes up a general ledger. So again, it can be in a spiral notebook. It can be in your computer, which of course we're going to move to pretty soon. Our building account, there's the date, the description. You just bring the description over. The reference number is general journal entry 4. The debit is $180,000 and the balance is $180,000. All right. So remember, the general ledger is all of your accounts, and each account shows every transaction that was posted to it. The balance sheet accounts will be from the beginning of time, and the income statement accounts will be just for the current year, okay? All right, so let's just take a peek at the other side of the building entry is a credit that went to note payable building. So it's going to look exactly the same, except for we'll have a credit of $180,000 and a balance of a credit of $180,000. All right, so we look at the equipment. There's our 3 equipment purchases. So anytime you're looking at the balance sheet and there's a total in equipment and you would like to see what makes up that total, all you have to do is go to your general ledger for a detail of everything in that account. All right. So let's take a look at the vehicles. Same exact thing, same thing. Date to record the year, make, model purchased from the local dealer on whatever date you chose. General journal entry number 1, $24,000 balance. So the same thing applies here. If we have 6 cars purchased over maybe 6 years, they'll all be listed here. So if you're looking at your balance sheet and you see $80,000 in the vehicle account and you want to know what makes up that $80,000, you just come to your general ledger, your vehicle account, look in your vehicle account for all of the details to find out what makes up that $80,000 balance, if that's what you're looking for. I did not ask you to create a balance sheet and income statement, but if you'd like to, let me give you a little bit of information first, and then you can stop here, give it a try yourself, and come back. This is a good time to talk about banking transactions. We have covered general journal entries, and just note that whenever you are recording checks and deposits, that's usually done directly to the general ledger. All right. Now, of course, using computers, most likely you're going to be downloading transactions. So just note that your banking information here on the your cash in the operating account, your transactions will be posted here. All of the debits and credits will be posted for you. You won't have to do any of that. The only thing that you'll have to do if you're downloading transactions is direct the system where to put the other side of the entry. All right, I just wanted to cover that real quick. We'll get into the computer pretty soon. So your banking transactions and even your credit card transactions are all done directly to the account, directly into the general ledger. All right, so let's go ahead and take a look at our balance sheet. Oh, and just to let you know, I've gone ahead and posted this deposit here just so we had some income. So if you want to record this yourself, if you're going to prepare the balance sheet yourself, you'll need this information. So the deposit was $2,000. The other side of the entry, of course, is sales, a credit to sales account for $2,000. Now, if you'd like to stop here, create that balance sheet and income statement yourself, come back and we'll go over it. Let's take a look at the balance sheet. We have assets, current assets. Remember, current assets are cash or anything that can be turned into cash fairly quickly. So we have a $2,000 debit balance there. Our total current assets are $2,000. Fixed assets are anything of value that's going to last you more than a year. So that's where we have our building, equipment, and vehicles, all with debit balances. There's our total fixed assets. Then we come down here for a total assets. That's both of these added together. $268,000 is our total assets. Then we come down to the liability and equity section of our balance sheet. Now notice I've changed this part. We're now calling it liabilities and equity because we have current and long-term liabilities that we've added here. So our current liabilities are due to the local hardware store because that's going to be paid off within the next year, within the next 12 months. That's a credit balance of $800 for total current liabilities of $800. Then we have long-term liabilities. These are all of the debts that are going to take more than a year to pay off. So we have notes payable building, note payable car, and note payable truck for a total long-term liabilities of $264,000. So our total liabilities are $264,800. And we come to the owner's equity section. The owner's contribution is $1,250. The net income is $1,950, which flowed through from the income statement. We'll go right there in just a second. So the total owner's equity is $3,200, giving us total liabilities and owner's equity of $286,000. That is exactly what we have up here in total assets. These are $268,000 debit balances, and this is a total of $268,000 in credit balances. All right, then let's take a look at the income statement real quick. Our income, sales are $2,000, expenses are $50, so our total net income is $1,950, and that's a credit. So that flows through to our balance sheet as net income, $1,950. All right, so I hope that gives you enough information. Again, please don't hesitate to leave me a comment. If you like the videos, if they're helping you, please let me know. And please share and subscribe. Thank you.